It's about that time of day again, folks. My name is Joseph James. Today is Tuesday, November 22nd, 2016, and this is your nightly newsletter. We're covering crude oil, S&P 500, gold, euro, and FDAX this evening. Crude is bearish and trying to finish off a measured move tomorrow, but there's a rising support trend line standing in the way. The E-mini S&P is bullish and trying to push through the resistance at today's fresh all-time highs. Gold is bearish, trying to retest the low and trading at the high of a channel. Euro is bullish and trying to finish rotation back to the high of a trading range, while the FDAX is also bullish, trading at the high of a bull flag and trying to retest the high from earlier in today's session. I have another great newsletter for you tonight as we go into the Thanksgiving holiday later on this week. We have one more full day of trading tomorrow, so we better be prepared. I also want to remind you the only place to watch the full-length version of this newsletter video is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link in the description of the YouTube video. Follow that link and come join me for the full-length version, all 5 markets and all of our detailed analysis on the blog at Sideways Markets. While you're here, please don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Download the charts. All the charts you see me using in tonight's video, you can download those charts below the video on the blog in the upper right-hand corner. Don't forget to grab your free pass. If you're not a member here at School of Trade, I'd love to give you a free pass. Come out and join me in the trade room as a guest. And if you're brand new here to the SOT community, please don't forget, we get a great frequently asked questions page on our blog. Learn all the who, what, where, when, and why. We're considered to be the industry leader in professional grade trading education and trading strategies. And don't forget, guys, I'm always here to answer all your questions 24/7, 365. Hit me up on the live support button on the right-hand side of the website. Boy, holiday shortened week this week. Hope you guys have had a great week with me here so far. What a great week we've had. We've had an incredible Monday and Tuesday session with all of our students in our trade room. Don't forget, come join me tomorrow morning in real time at 8 o'clock Eastern time. I'm opening up my trade room with all of our advanced members tomorrow in the trade room at 8 o'clock Eastern time. Let's take a look here at the calendar for tomorrow. As we talked about earlier on this week here, we got Thursday. Markets are closed for the Thanksgiving holiday. Friday is going to be a half day. You'll have a few hours there Friday morning, but for the most part, though, your job on Friday is to recover from all the tryptophan, right, from all the turkey we've been eating on Thursday. So markets closed on Thursday, half day on Friday. It's actually really a half day on Friday. There's actually NYSE early close at 1 p.m. on Friday. So whenever you see that stuff, you want to be thinking if you can get to it really early, between 7 o'clock and 10 a.m. Eastern time, that's really where you're going to get, if anything, really the most reliable trading opportunities on Friday. So last newsletter of the night of the week for me, right? Tomorrow, of course, being Wednesday. I won't do one tomorrow night because, of course, Thursday, the markets are closed. I'm going to get out of this office here and spend some time with some family and friends here for the holiday and give thanks for people like yourself for watching my newsletter here. So Thursday, Friday, don't forget Thursday is a day off. Definitely please take that day off here. We don't get that many, so make sure you do take that as an opportunity to rest, repair, refocus, and relax. And then again on Friday, of course, get that half day on Friday. We got some more work to do tomorrow, though, right? Tomorrow's the last full day of the week, and yeah, they definitely have jammed in as much stuff tomorrow as they possibly can. This thing is literally from wire to wire. We start off tomorrow morning, 3 o'clock, 3:30, 4 o'clock in the London session. If you're trading the London session tomorrow morning, you get a peppering of news from France, Germany, and of course the ECB being the headlining news number tomorrow morning at 4 a.m. Eastern time. Then we go down the line here. We got durable goods and jobless claims. Jobless claims on a Wednesday? Yeah, Thursday's a holiday, right? So they're pushing it all together here. 8:30 a.m. durable goods and jobless claims. That's going to be a definite doozy tomorrow morning. Then we got 9:45, the PMI manufacturing index tomorrow. As if that wasn't enough, we're going to keep going here. New home sales at 10 o'clock. Should I stop? You want to, uncle, right? 10 o'clock tomorrow. We get the new home sales along with the really non-relevant consumer sentiment number. And the big number for crude traders tomorrow going to be the petroleum status report, the inventory report tomorrow morning at 10:30 a.m. Eastern time. They're not done yet. They're not done yet. No, there's more, right? The FOMC meeting minutes will come out tomorrow afternoon at 2 p.m. Eastern time. So you better stretch. You better stay hydrated, and I would recommend a helmet, maybe a mouth guard, right? Some elbow pads or something tomorrow, because it's going to be a busy one. What happens on the days before the holidays is that everybody's got to do business tomorrow. Nobody's going to want to come out and do business on Friday because, again, Thursday's, of course, a holiday. The markets are closed. So nobody's going to be able to come in on Thursday. Friday means if professionals don't get their job done tomorrow, and I'm not talking about professional day traders and speculators like you and I. I'm talking about people who actually have client assets under management. They have to get some work done for their clients, right? Remember, futures actually wasn't created for us day traders. It was actually created for people such as farmers, right, to hedge their crop in the field. So we know there is going to be some business that has to be done. All of it, if I'm managing capital, I'm looking to get it all done on Wednesday because I do not want to have to roll out of bed on Friday, right, and go dipping my toe in the shallow waters, right, that'll be there on Friday morning. So tomorrow we expect to get a lot out of tomorrow, a lot of movement, news early in the day, all the way to the late, right, all the way towards the end of the morning, the end of the day here at 2 o'clock Eastern time. The most important news tomorrow is definitely going to be from the ECB at 4 a.m. It's going to be that 8:30 durable goods. It's going to be those new home sales at 10 a.m. and it's going to be that petroleum status report, right? If you're a crude trader or an S&P trader, tomorrow at 10:30 a.m. Eastern time. Now, don't forget, we open up our trade room tomorrow at 8 o'clock Eastern time. We're going to go over each of these news events and we're going to put together a plan of attack. The big one is the inventory report. You know my cutoff is always 15 minutes, right? So 15 minutes before, 15 minutes after, right, that petroleum status report tomorrow. So that's really the only variable that's going to be a little bit out of the norm tomorrow morning. Everything else is pretty much a standard market moving event. We'll give it that 5-minute buffer before and after. Like I said, you better come to play tomorrow because there's a ton of news on the schedule. Let's jump right in. We got crude, S&P, gold, euro, and we're going to wrap it up with a very, very crazy FDAX here tonight. Crude is bearish and trying to finish off a measured move tomorrow, but there's a rising support trend line standing in the way, which tells the bears to look for a breakout pullback below the trend line for a move back down to retest the lows. One thing to keep an eye on tomorrow will be that prior month low at 47.23. Unless we blow through it easily, we'll likely create some consolidation around that 47.23. It's also the double down there as well. So focus on selling high if price collapses but stalls out around the low. And the target right now, of course, is the low of this range down to that prior month low, and of course the low of the channel and that measured move. Looking at this market right now, we're coming out of API inventories here this evening. It's pretty simple here. The major components right now on this chart are going to be that bear channel. Whenever I see a bear channel, I know two things. First, I want to sell the high of the channel and any areas of resistance above the high of the channel. Second thing is going to be my objective is to retest the low, right? My objective is not to finish the measured move at this point. My objective is not to go all the way down to the opposite side of the channel. My objective when I sell the high of a bear channel, right, above the high of a bear channel I'm doing right now, my objective is to get back down and retest that low. Bear channel, sell the high of the channel, sell traps above the high of the channel, and bring it back down to retest that low. Once we get down to that low, then we can see what they want to do from here. Do we see it run through and then give me confidence now to make that move down to that measured move going lower? Second key component here on the chart is going to be this rising support trend line. I think this is the most important clue in the chart right now. It's obviously a bearish market here. As it turns out, this whole OPEC production freeze isn't going as easily as they all wanted us to think. Like I said, didn't I say it last night, right? I feel like I've read this headline like a million times over the past few years, right? There's a production freeze coming. Oh, wait a second. Some people don't want to cut, blah, 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 blah. So now, of course, we're starting to see this now come together here, right, where we've got prior month low, right, and that measured move now acting as target. So the OPEC deal, we'll see what tomorrow's soap opera brings. But as of right now, it doesn't sound as peachy keen as it sounded coming out of Sunday evening into Monday's session, right? So, of course, how quickly that stuff changes. The bottom line right now is the bears are hunting for a retest of the low. From there, possibly get through that low and then down to that measured move. What are we looking for here right now? There's really two spots. There's really three scenarios here that you want to be thinking about if you're going to be a seller. The first one is going to be a breakout pullback using this trend line. Right now, the trend line is acting as support, right? The most reliable way to trade this is going to be a breakdown, show me a close below the support trend line, turn that support into resistance, and then look to sell it on the pullback back to either retesting the trend line or possibly, something like this. You may see this happen here, right, where we see it jump up. Maybe it doesn't hit the trend line, right? But the buyers try to buy it, they fail, and then back up. Bottom line is looking for that breakdown, right? That pullback. I love to get involved with the moving average. I love to use that trend line, right? And then, of course, right back down we go. Okay, and that's definitely going to be the most reliable selling opportunity as we go lower. One thing you want to be careful about is if we do make it back down to that low, we may see the market slam lower, but then rather than continuing lower and allow us to go hunting for that measured move, we may just see it slam lower and then kind of stall out here right now at that prior month low. It's a double down. It's the low of the session today. It's also the prior month low, right? It's last month. It's October's low. And as we get later and later into the month of November, these prior month levels become more and more important as traders start playing red light, green light as far as month over month progress. Now, if that does happen, what you want to be thinking about is it's still a bear market and you want to be looking to sell as the price goes up, right? So sell it, failure, back down. That's what you want to be thinking if this market does slam lower, achieve the objective, but can't quite get through that low, right? What would that look like, by the way, if it went through that low? What I'm looking for here is I'm looking for that breakout, pull back, on the way down, breakdown, and then there. So you want to be thinking at really basically sell high now, or you've got to sell below that prior month low. The third thing I want you to keep in mind here, is going to be strength. When we get down to that low, I don't want to sell low unless the sellers give me no choice. And what I mean by that is when you see it break through that low, is it a strong breakdown or is it a weak breakdown? I like to use the moving average to define whether or not it's a strong breakdown. I want a strong breakdown, get that moving average below 47.23, and then that, of course, will give me the confidence to try to finish off that measured move for tomorrow. Now, what about the buyers right now? Well, as far as I'm concerned, this is a very bearish market because you can see just how quickly those sellers sold right into what was a very, very strong move higher, right? That's a pretty darn strong move higher, and it didn't really do much at all to budge those bears who were waiting there to sell up for a trap high. That tells me there are quite a few sellers that are probably going to fade this move, right, as this market tries to go higher. So what are we going to do if you want to be a buyer? In my opinion, you've got to get this price up and hold above that 48.59. No, it's not going to be easy, but it will be a more conservative way to do it. Right, you're going to have pullbacks here, but I'm going to wait, though, until I can really see, again, just like we said earlier, when we want to see strength at the lows, right, I'm going to want to see strength here going higher. I need to make those sellers think twice before they try selling into it, and the only way to do that is going to be a nice strong breakout pullback. Turn that 48.59 area into a reversal line, and then use that reversal line possibly in combination with this trend line, right, for a buying opportunity as we go, right, as we go higher. Again, don't be so quick to turn trend direction, right? Remember that trend almost always finds a way to go back and retest that low. Make the buyers prove it to you. Let's keep going here. We go from the crude to the E-mini S&P, which is bullish and trying to push through the resistance at today's fresh all-time highs. The bulls look quite strong coming off the lows of the range, and the bull channel tells us to expect the buyers to get a pullback and a retest of the high, but I'd rather not buy the high of day. So my plan will be to look for a trap around the reversal lines listed below with a target going back to retest the high and a runner up to the measured move tomorrow. Now, there are really, in this point, there are 3, maybe 4